Analyzing a company's financial ratios can provide valuable insights into its financial health and performance. Financial ratios help investors, analysts, and stakeholders assess various aspects of a company's operations, profitability, liquidity, and overall stability. Here are some of the most important financial ratios to consider when analyzing a company. 1. Liquidity ratios. Current ratio, current assets, current liabilities. Quick ratio, acid test ratio, current assets inventory, current liabilities. These ratios measure a company's ability to meet short-term obligations. A ratio above 1 indicates good liquidity. 2. Profitability ratios. Gross profit margin. Gross profit, revenue, x 100. Net profit margin. Net income, revenue, x 100. Return on equity, ROE, sad face, net income, shareholders' equity, x 100. These ratios assess a company's ability to generate profits from its operations. 3. Debt management ratios. Debt to equity ratio, total debt, shareholders' equity. Debt to assets ratio, total debt, total assets. Interest coverage ratio, EBIT, earnings before interest and taxes, interest expense. These ratios evaluate a company's level of debt and its ability to service its debt obligations. 4. Asset management ratios, efficiency ratios. Inventory turnover, cost of goods sold, average inventory. Accounts receivable turnover, revenue, average accounts receivable. Total asset turnover, revenue, average total assets. These ratios measure how efficiently a company utilizes its assets. 5. Return on investment, ROI, ratios. Return on assets, ROA, sad face, net income, average total assets, x 100. Return on investment, ROI, sad face, net profit, total investment, x 100. These ratios assess the returns generated by the company's assets and investments. 6. Earnings per share, EPS. EPS, net income preferred dividends, average outstanding shares. EPS represents the portion of a company's profit allocated to each outstanding share of common stock. 7. Price-earnings ratio, PE ratio. PE ratio, market price per share, earnings per share. The PE ratio compares the market price of a share to its earnings, helping to gauge whether a stock is overvalued or undervalued. 8. Dividend yield. Dividend yield, annual dividend per share, market price per share. This ratio indicates the return on investment from dividends. The importance of each of these ratios will vary depending on the specific company and industry. However, all of these ratios can provide valuable insights into a company's financial health.